Welcome to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm speaking to you from New York City on this, the 9th day of July, 2019. Do like to remind you that I am the editor of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks, and we're focused primarily on the junior mining sector, exploration stocks, probably 90% of the stocks that I cover. And there's some really exciting things going on these days. A few of those companies that I follow are sponsors of this show, and we'll be talking to one in a little while. Strike Point Gold, Sean Kuhn will be with me, as will today. Also, we'll also have with me Alistair McLeod and Michael Oliver. I should also mention that Chen Lin is vacationing for about a month and a half or so in Asia with his family. He'll be visiting, actually, Novo Resources project in Western Australia, and we look forward to talking to Chen when he comes back about that. And he also is plugged in very well to his friends and his connections in China, which we'll also want to ask Chen about when he comes back. If you don't want to wait for Chen on the radio show, you might consider subscribing to his newsletter. You can go to chenpicks.com. The letter is What is Chen Buying, What is Chen Selling? Has had a stellar record, especially in the biotech space, but also with energy and also with gold and silver mining stocks. So what is Chen buying? What is Chen selling? chenpicks.com. My letter, you can go to miningstocks.com to subscribe to that. Jay Taylor's Gold, Energy, and Tech Stock, or you can call our office here in New York City, 718-457-1426, 718-457-1426. Of course, I want to thank you for listening to the show, making it one of the more popular shows on the Voice America Business Channel. Also want to thank our sponsors for making this show economically viable. Our sponsors this week are Klondike Gold, Novo Resources, RN Resources, Strike Point Gold, and Radisson Mining Resources. I've titled today's show, The Impact of Financial Wars on Gold. Alistair McLeod will be with us. Sean Kuhn, as I just noted, and Michael Oliver is with me, and we'll be talking to him in just a few seconds. The financial war between America and China is escalating dangerously into a war to secure global financial resources. At a time of growing liquidation of dollar assets by foreigners, the U.S. Treasury's internal analysis will highlight future government funding problems in light of a developing U.S. recession. That will result in an over-dependency on inflationary financing, threatening to destabilize the dollar's purchasing power. For these reasons, America needs foreigners to buy its treasuries at a time when China also needs to sell them to help finance her infrastructure plans and future development. And Alistair McLeod will be with us in the second half of today's show to focus on those topics and also how they connect to our markets in general. And right after our first commercial break, Sean Kuhn will be with me to give us an update on Strike Point Gold's hunt for gold in British Columbia's Golden Triangle, and he has some very important relationships that he's developed with other more advanced companies in that part of British Columbia, and we'll ask Sean to elaborate on those when we talk to him right after our first commercial break. But right now, Michael Oliver is with me once again, and it's OliverMSA.com, OliverMSA.com. Go there and check out Michael's work. I think if you are a serious investor, you want to consider subscribing to his newsletter. Thank you for joining me again, Michael.
Hi, Jay. Good to be back.
It is always good to have you every week, almost every week. We thank you so much for making yourself available because I find your work to be so helpful, and I know a lot of our listeners do as well. Gold has finally broken through that key resistance level of 1360. What should we look for next, and what might that mean for the markets in general?
Well, one thing that MSA does is we don't just look at one market. Like, unfortunately, a lot of people who are into gold are into gold. Okay, and they're very focused on gold or silver and so forth. And you need to look out all the time. And this is also true with stock investors who are, possessed with the idea you have to always be long the stock market. Yeah. And they're just looking at, a new high, it's glorious, et cetera, et cetera. Look out the side mirrors and look out the rearview mirror, not just the windshield, because what other markets are doing is often important and telling. Mm-hmm. And what we've seen, not just the gold surge, which indicates a rush of new money into the gold market after we took out a very obvious price chart trend line that goes across the highs of the last 4 or 5 years, namely going through that 1350, 1360 level. And, of course, that created a surge, no surprise, and we're holding steady around 1400 right now. And we think it's going a lot higher, but we've got our eyes set on the possibility of 1520 area as a possible midpoint congestion zone en route to something up into 1700s, which we think this move will produce a move to that level. That's not the end of the entire move, but that's just the big leg that we think has begun. But you look out at the side mirrors, and you still see the investor asset class preference shift toward T-bonds, T-notes, and therefore creating lower rates in the process. That may not last a long time, but right now that is definitely a clear trend, and it's indicating that somebody doesn't quite believe in the stock market because they're shifting assets into T-bonds and T-notes and other government instruments around the world. Gold has obviously benefited lately. Gold miners have suddenly grown a backbone. The GDX price action is gone from the totally dormant, non-volatile to electrified. Just look at a price chart of GDX over the last several months, and you'll see what most people would believe is unbelievable. It came from total doldrums to with gaps and everything on the upside, and it's run from $20 area up to 26. And we think the GDX is probably headed for a challenge of the 2016 highs, which were 3190. So we think that's part of it. We're basically probably in a midpoint congestion in GDX and out to that level. But the GDX has definitely swung from par to underperform versus gold to an outperformer. And we think that trend shift, which occurred in the last month, is the beginning of a major ongoing trend shift favoring gold miners over gold. What would that indicate? It indicates to us that there are a lot of asset managers and investors around the world who, while appreciating what gold has done, don't want to buy gold, they want to own the miners. And therefore, that is an indication of the investor preference shift. Out of the side mirror again, you're looking at relative performance of miners versus gold. The dollar is confusing to most people. They think is a firm dollar. Well, firm is a overdoing it a bit. It's sideways. Since August of last year, the dollar index ran up to 97 in price. And if you draw a line across August high of last year, so what are we talking? A lot of months. You're trading around 97 now. So it's twisted and turned either side of that level, teasing both sides. We think the big move is down. We think it began in 2016-17 early when we came from a high at $103.40, and now we're laboring in the upper 97s. A counter-trend rally is what we call it. We think it'll resume the downside. But take it into context. If you waited for dollar weakness to buy gold, remember August of last year, gold was at 1160 plus. Dollar index was 97. Well, the dollar's still at 97, but gold's at 1400. If you're waiting on the dollar to give you approval to buy gold, it was you've misled yourself. We think it'll be a late signal.
I would say so much for the idea of a stable dollar. It certainly doesn't buy nearly as much gold as it did a year ago. So
it does not. And other currencies, of course, throughout the world, the gold is
even worse,
rampaging against them. So the side mirrors all indicate that something's wrong with the stock market, and I think that's what's going to help gold the most in the coming months is the decay rollover in the stock market, the U.S. stock market in particular.
Right. Well, Michael, I understand that you're turning pretty bullish on the whole commodity complex again, not as selectively. You see gold leading the charge, I guess, right?
This is, I think it's an overlay of what happened between 1976 and 1980. Gold made a low in 76, started to turn up into 77, and commodities were about a year behind it. And gold led all the way up to the 1980 high, but the whole commodity complex exploded. And what was the world environment then? Stagnation. Pathetic economic numbers. The stock market itself was a loser's place to be for nearly a decade, certainly during those years. And the commodities, basically, you name the commodity, and it was vertical. But it was led by gold, and all during the move, gold still outperformed the commodity complex. But right now what we've got is in the first part of the recovery in commodities from the 2016 low, crude oil and copper performed very well. But then they topped and they've collapsed back down. Not to new lows, but sharply declined from the recovery highs. So they were both a positive and then a negative contributor to like the Bloomberg Commodity Index. Mm-hmm. Meanwhile, the grains were dormant all during 2016 through 2018 in a low price level range. Mm-hmm. But now the grains have resurrected themselves by our metrics. Soybeans a bit of a laggard, but corn and wheat clearly have. Sugar, coffee, and cocoa are looking good. Soft commodities, which few people look at. Yeah. The meats have firmed. And we think that the copper and the gold negative implications are basically dissipated at this point. We think they're trying to bottom for a next up move, at which point they will contribute also a more uniform contribution to the commodity complex, because you'll have grains going up, you'll have copper and crude oil turning back around and headed back up. We think that's something to look for in the next several months, not necessarily right now. But the point being that if gold's leading a charge, that we need to see the troops organizing below it, the commodity complex and all of its sectors, turning upward in unison, not in segments, which is the way they were in 2016 through 18. So we think we're seeing that evidence of that now. In which case, you could make the case, welcome to 1977.
Oh, well, I don't know. I don't. That was a pretty unnerving time frame, as I remember. But that's when I got interested in gold shares. I have to tell you that, because I saw these little penny stocks go absolutely bananas to the upside. So, it's an exciting time. It's not necessarily the best of times in terms of stability and all that. But anyway, it is what it is, Michael. And we're so thankful that you come on to help us realize what it is. So thank you so much for being with us again.
Thank you.